your salary is changing from April. Not just the number, but also the structure. And this impacts how much money hits your bank account every month. Now there are two laws behind these changes, not one. Let's start with the labor code, because this is where a lot of major changes happen. The first one is your basic salary should now be at least 50% of your CTC. Let me explain. CTC is basically cost to the company. This is how much the company spends on you. Your basic salary was just one part of this number. Earlier, till now, this basic salary used to be only 25 to 30% of the total money. Why? Because PF and gratuity that the company calculates is on the base of this basic salary. So the lower the base salary, the lower the PF and gratuity the company has to contribute. But now, the base salary has to be at least 50% of the CTC, so the base salary has increased. That means the PF and gratuity contribution also increases. But what this also means is that our take-home in-hand salary reduces. Let me explain clearly with an example. Suppose this is your payslip before April. Your basic salary 18,600. This is allowances, HRA and others 43,400, making your total earnings of 62,000. Your PF is calculated at 12% of the basic salary of 18,600. Which comes to 232. Now these are tax and other deductions. Now our take home salary is total earnings of 62,000 minus the deductions of PF, tax and others. So it comes to 50,000. Now what happens April onwards is our total earnings 62,000 remain the same. Now since basic has to be at least 50% of it becomes 31,000. That means our allowances go down from 43,400 to 31,000. Now when we come to deductions, tax and others remain the same, but now PF is calculated 12% on 31,000. So it becomes 3720. So now when we calculate our take home salary, total earnings of 62,000 minus PF, tax and other deductions, our take home salary now becomes 48,512. So if our earlier take home was 50,000, it now becomes 48,512. So our total package, even though remains the same, more is going towards the future than the present. The second point is, if in case you're leaving your job or resigning from it, your pending salary and leave encashment has to be cleared within 2 working days of your last day. Now PF and gratuity have their own separate timelines. The third one is, in case you're on a fixed term contract, you're eligible for gratuity after 1 year of service. For permanent employees, it's still 5 years. Now all these 3 changes are because of the labor code, which came into effect in November 2025, but the implementation deadline is April 1st, 2026. This applies to all employees and not just the new hires. But this implementation is done state by state and company by company. So in case it is not already happening with your company, it will happen in the future. Now the second change is brought by the Income Tax Act. Earlier, we were following the Income Tax Act of 1961, which has now been replaced by the Income Tax Act 2025. Basically, the language is simpler, the sections are fewer. The tax rates and the slabs have remained the same. But several things on your salary are now treated differently, and some of it is actually good news. We'll divide it into 2 parts. One is the perks and one is the HRA. The first one is your perks just got more tax friendly. This is both for the old regime and for the new regime. If your company gives you a meal voucher or a food card like Sodexo, the tax-free limit just went up from 50 rupees to 200 rupees per meal. And the gift vouchers, say a Diwali gift card, the tax-free limit has moved up from 5,000 to now 15,000. Now, if you're following the old regime and have children, the education allowance that the company can give you just went up from 100 rupees a month to 3,000 rupees a month per child. Now, all this depends on what the company can offer and which tax regime you follow. So it's good to have a quick conversation with the HR or anyone appropriate. And if you're claiming any of the old regime benefits, it's good to have it declared early, because the new regime is now the default unless you declare it otherwise. The second one is HRA. Now this is for the people who follow the old regime and are paying rent. But it's worth knowing for everybody, because if you want to switch later, you'll have a good idea about it. Now there's a formula for how much of your house rent allowance HRA is tax-free. Part of that formula dependent on which city you are from. For example, metros got an exemption of 50% of the basic salary, and non-metro cities got an exemption of only 40% of the basic salary. Till now, only 4 cities were considered as metro: Delhi, Mumbai, Kolkata and Chennai. But from April 1st onwards, 4 more cities are added to this metro list for this calculation. They are Hyderabad, Bengaluru, Ahmedabad and Pune. So if you're in any of these cities, you get a little higher HRA exemption just by living in them. Second one is the paperwork just got a little stricter. So if you're paying rent more than 1 lakh rupees per year, which is approximately more than 8,333 per month, it is mandatory to give the PAN of your landlord. And cash payments don't work, only UPI bank transfers and checks work. And it is really important to declare your relationship with the landlord. Which brings us to the next point. So in case you're paying rent to your parents, it's important to have a rent agreement in place. And rent must move from your account to their account. And your parents should declare the same rental income in their annual returns. And you should clearly disclose that the landlord is your parent. In case any of these things are not done, the claim can be rejected. And the penalty for a false claim is 50% to 200% of the tax you avoided. And the last quick update is that earlier Form 16 is now called Form 130. Now all these changes are applied by the Income Tax Act and the Income Tax rules and are applicable from April 1st onwards. So here's what you can do. Take your salary slip for the month of April and check it against the previous months and see if there's any restructuring that happened, HRA allowance increased because you're living in any of those 4 cities, or any other allowances that you got an extra perks for. If this helped, share it with someone who's confused about the April changes related to their salary. If this is your first time here, I make videos on money, investing and adulting in plain language. So make sure to subscribe so that you don't miss out on them. So see you soon in the next video. Until then, bye bye. If you like this video, make sure to check out the other 2 videos which I'm pretty sure you like as well.